Insiders are always buying and selling, but there are clear examples of when it's timed perfectly, allowing them to exit while others come in for the buy on the other side. This happens very regularly with share repurchases, but now this extends into what we saw in 2020. Big announcements allowed insiders to cash out on some of their investments. Now there's nothing new about this activity, but what needs to be focused on is the underlying problems within the system and what's really going on. You came here for the truth, so let me unveil that for you. We're going to lead with this information. We're talking about what has happened with the different makers, which I can't exactly say all the details, of course, just the way the algorithm works. So we're going to look at these two particular companies among others, and I think it's important to see exactly what they had been up to. But again, as I mentioned, this is just the beginning. It's not going to tell us anything in depth. I want to show you some other factors today that I believe are going on with the financial system fundamentally. That's where the problems are. Not necessarily some insiders trying to make a quick buck off of what they see the action in their stock. We saw the same thing with GameStop and COS and what was the other one? AMC. The stocks went up like crazy. Hey, the insiders sold off. They saw it as an opportunity. This right here is just one more example. But like I said, we're going to go into some other factors. Stay with me. Let's go. Insiders at the companies making the jabs are actually looking at $500 million of sales in stock in 2020. $500 million of sales just for a handful of companies. That is significant. Executives at Moderna and Merck are among those who have reaped the biggest rewards. Let's look into it further. Executives and directors at Pfizer, Moderna, and other companies sold approximately $496 million of stock last year, reaping rewards of positive developments that drove up the value of their shares. Okay. Like I mentioned in the introduction, that doesn't tell you everything of what's going on, and it happens all the time. And I know that most people would say, look, this is all part of a scheduled plan that's put in place that these companies have, where the executives are given compensation that isn't just salary. A lot of them are able to reap the rewards of the share price at certain times. They're scheduled to sell off, and that's kind of like their salary. When they sell it off, they get that chunk of cash, and then they can go and invest in it or buy a yacht or whatever it might be. So we need to be focusing on exactly what they had done. And I want to stress the fact that if you look at the next chart, it wasn't just those shares that were pre-scheduled. This was something else altogether. Executives and directors at the same 13 companies sold about $132 million of stock in 2019. So you could see that there had been a serious uptick throughout 2020. Obviously, the price going up as they did. In dollar terms, much of the sales came from a single company, Moderna. And that just shows you what has been happening very clearly with this one company, but it extends into the others. On the previous page at the bottom, basically it's talking about the fact that as soon as they hit their certain milestones, that's when they were selling off. I wanted to show you this here. Change of plans. Some insiders at companies were reporting stock sales based on trading plans created or modified last year. That's the key. That's what's important. So the pre-plan, which is the darker blue color, might be hard to see on your screen. It's most visible right here under Moderna's stock sales. And you could see that clearly beyond all the other companies, whether it's Merck or Novavax and so on. This one was head above the rest. This just gives you an idea of each of the companies, the bigger companies or the ones that were most affected by this and what they have been done. Was it a modified or new plan? Was it no date specified for the plan? No trading plan disclosed? That's all documented right here. And I'm simply trying to stress the fact that this wasn't just a group of people who were selling simply because that was something scheduled the year prior. No, that's not what's occurring here. All right, let's switch gears. Let's get into what's happening underlying all of this. You have seen retail sales bursting higher in January as consumers use the stimulus checks to spend heavily. Yes, they got their $600 check, and apparently that's what's stimulating the economy. I'm not really sure. I mean, $600 is just not enough in that respect for people to just be going out there. A lot of that was going into what people really, really needed to buy, at least a large group of people. They had things that they were delaying because they're waiting for that stimulus to come through. And now they're wondering, is the $1.9 trillion stimulus going to get passed because there's more money coming through? We'll see what happens and see how that affects retail sales as well. We know that the economy right now is doing terribly. You look at many of the different types of businesses that have shut down already, that are not being disclosed whatsoever, because you look at the retail store closures, none of that really is factored in. If you see how many businesses shut down and you look at the amount of unemployed people, you look at the different factors that all go into play with what makes up the economy. And it's clearly a fact that something doesn't add up. It stinks, it smells, and yet you and I, if you're a regular viewer on here, you and I know there's something seriously wrong with the information they're showing us. But people who are heavily and overly invested in the stock market will believe it because that's the way it works. You'll believe anything as long as it benefits you. And I get it. I understand why that people do get into that sort of zone. But I mean, there's so many fantasies that people can be watching instead that I believe are better off. I mean, there's Snow White and the Seven Dwarfs, there's Cinderella. I mean, there's all these different fairy tales that they all live happily ever after at the end. And that's such a different situation from what we're seeing today, isn't it? This article right here is talking about Jim Rogers. You probably know of him, and he gets criticized a lot because if you have ever been interviewed in the way that these guys have, it's really, really difficult because they already set you up for what they know is going to be your answer. And so they ask him, okay, what's in a bubble? What's going to crash? What's the way that and so he responds. And I know that same thing for Mark Faber and for others. This is something that you need to actually do a little bit more research on, because if you read any of his books, I read Hot Commodities by Jim Rogers, great book, and it just gives you some insight as to what's happening in what he talks about. Particularly in that book, it was all about commodities. And you look at the way that he sees the world, the way that he sees investments. If he's talking about something in a bubble, if he's talking about something's going to crash, he doesn't mean that it's going to happen right now. That's kind of the way that I look at things too. You see things that are overvalued, you see things that are undervalued. And as an investor who has gone through so many cycles like he has, he realizes that there's always going to be money made. There's going to be money that's put into certain assets and taken away from certain assets. At the time, it all depends. But you got to look at what he is actually doing, and he gives little hints here and there. He is not saying sell everything. He's simply looking at the assets that are overvalued, and he simply says right now, in the US, everything has gone up to such a degree that it doesn't make sense to buy in right now. He's not saying that, it's going to crash tomorrow. They take him way, way out of context. And that is really unfortunate. And they do this all the time to people like this. And, as somebody who's criticized, I mean, I'm obviously significantly smaller than somebody like Jim Rogers, but it's the same process, is that people, they don't read the book, they don't understand what they're talking about. I'm sure the most people who criticize Faber never read his book, Tomorrow's Gold. They never read about these things. Why? Because they just give me the name of the stock I gotta buy. Just give me the ticker. I'm gonna buy it. And if it does well, then you're smart. And if it doesn't do well, then, you're the one at fault. It's such a joke. Anyway, you can read the article if you want, but basically that's what I got out of it. This was quite funny, actually. We're looking at the chief investment officer at JP Morgan, and they're basically saying that they are getting into this. Check it out. Right here, betting on an ever more intensifying rally across, check it out, junk bonds, emerging market debt, and risky bank securities as fresh stimulus beckons. Look at what they're doing. Look at where they're putting their money. Why? Because that's where the yield is. This is where you want returns right now. And they keep putting the money in because they basically, as he says here, the Federal Reserve is printing. We've got nothing to worry about. I mean, it's unusual. And at the bottom, he said something else here. The reflation trade has a lot of room to go. Central banks are printing more money than every day, and that money finds its way into the market. This is not going to stop anytime soon. This is what JP Morgan is saying. This is what they're doing, and many people are following along. Name confusion fuels wrong Clubhouse to surge over 1,000%. They're talking about Clubhouse and the popularity and how this app has just seen this surge in valuation along with the amount of people that have been running to the app. It's extremely popular. And then all of the retail traders rushed in to buy Clubhouse Media Group, which has absolutely nothing to do with the Clubhouse app. This is the market that's been created. Many times this has happened over the last little while. It's become a joke. This is the chart that corresponds to it. You could see how ridiculous it has been, but hey, we're in a casino, aren't we? This was some interesting information. It was the fact that mortgage demand falls further as rates rise at the fastest pace in months. This is surprising to me. It didn't really catch on with all of this, but of course, when you look at what's been happening with the longer dated bonds and so on, you can see that they have been picking up. So that should have been very clear. But my assumption was that the companies would reduce their spread, but I guess they really couldn't do too much. It's still historically extremely low, under 3%. So we'll see what happens here in the coming weeks. The Federal Reserve is probably going to have to come up and push those rates down on the longer end. We'll see what happens. This was an interesting one as well. I look at what people say all the time, that the stores, that the businesses, the corporations, institutions, they should be taking a hit. They should be paying more in taxes. They should be doing this, and this. Look at this example of what happens when you try to force a company, a big corporation, into paying more. Grocery giant Kroger plans to close 2 stores in Seattle after the city passed a $4 an hour hazard pay mandate for grocery workers. They can't do it. What do? Simply close the store down. So now nobody has a job in that place. You were going to force them to pay an additional $4 an hour. Now you're paying them $0 because the store is closed. Businesses, big businesses especially, will not, under any circumstances, cut into their profits. And now jobs are gone. Quick update on what's going on with the balance sheet of the Federal Reserve. By the time you're checking this out, the actual website might be updated with the new information, but regardless, it's consistently going higher. On average, we are at we're heading closer and closer to that $7.5 trillion, getting there day by day. Quick update on what's going on with gold and silver. Of course, by the time you see this, who knows where it's at. But I just want to show you the trend over the last year. You could see that since March 2020, essentially, it peaked up both gold and silver. Gold is on the left side and silver is on the right side. It peaked around, let's say, August timeframe. Now, since then, gold has not performed nearly as well as silver. Silver's been roughly trending upward, whereas gold has kind of been sinking. It's synced actually below the 1800 mark, and silver seems to be chugging along. These operate sort of in sync, there's no doubt about it, but sometimes they do fall out of that, and this is one of those times. Interestingly, you look at what's been happening with all of the other metals and, platinum and so on. They've been doing really well, whereas gold hasn't been seeing so much of that price action. I'm going to end the video there. If you found it informative, hit that thumbs up button. When you do, you're supporting me. I want to thank you for that. It's very easy to support this channel. You could just click a button and that helps me out a lot. If you comment as well, of course, that helps to push it. If you share the videos, those two, thank you very much. If you want to learn about e-commerce, you can do so for free at the AmazonGPS.com. If you want to understand the financial system, everything you need to know explained so easily in these two books. Maybe you already know, but maybe there's a family member, a friend, coworker, and so on who needs to know. Get them these two books or share the link with them. It's in the description. If you haven't seen this video yet, I would highly recommend checking it out. It's right there. Click it, and I'll see you there.